Welcome to the BnB Market Talk episode 2. Today our goal is to tell you about what happened in the market last week and what we predict is going to happen next week. So first of all, we're going to be talking about why the market dropped on Monday and why it semi-dropped on Friday and why it went up crazy amounts on Tuesday, Wednesday, Thursday. S&P and Dow were stable. They went up during all those time because the recovery plays are hot at this moment. Everybody's going from tech to the recovery plays right now, especially those big hedge funds, and they are the one that influence the market the most. What we saw is on Monday, the inflation rates were going to come out on Tuesday. So there was a lot of uncertainty in the market, and when there's uncertainty, the prices of stocks, especially high growth stock, fall a lot. And we're talking about mostly about high growth stock is because what we've seen, the retail investors are mostly invested in those high growth stocks. The hedge funds are invested in both. They actually influence the market a lot. We've seen a lot of people believing in Cathy Woods' vision for the future, and they've been investing in such stocks. But what we've seen, the uncertainty on Monday was due to those inflation numbers coming out on Tuesday, and the bond yield went up. So it currently stands around 1.6. And people said that if the rates reach around 1.5, that would be very dangerous for stocks, and that's why those high growth companies kept on falling. They still even with the 3 day ups, they haven't reached those those highs they were on. Like especially like an example I can give you is SCR. Its high was very high, and it hasn't reached those highs. It's still they're still down, those high growth companies, from their highs, which is not a bad sign, but it's not a good sign. If you want to go in right now, it's good for you because you're not investing in those all-time highs.
So yeah, basically I'll be talking about why the market went up on Tuesday, Wednesday, and Thursday. So basically the inflation rate was expected by the market, everyone around it, to be between 2.5 and 3%. On Tuesday, it was announced that it would only be 1.7%, which is good news, which means that the Feds wouldn't increase interest rates. So it would be easier for companies to loan out money from the banks, which helps even more the growth stocks since they're the ones that need the most money to start up. That's why the NASDAQ went up from 3.2%, and you could see many growth stocks on, I think, Tuesday. I know NEO went up 7.2%. I know STPK, it's electricity growth company stock, it went up 22%. So that's why the growth stocks have been going up. That's why the market has been going up. But you could still see that there are lots of stocks that are still down. I mean, Tesla is down 21%. NEO is still down 22% from I think its highs at like 55%, at 55 last week, I think. And SCR is still down 32% since its highs. So we still have a long ways to go. So that's pretty much why the market has been going up.
Yes, the market has been going up due to those low inflation rates that was announced, and then the Feds, what they believe is that the Feds will not raise interest rate as soon as in 6 months, because when inflation goes up too high, what the Feds do is to counteract those high inflation rates, they increase the interest rate for banks to loan out cash. And if banks pay a higher interest rate on their loan money, then the companies will have to pay even greater interest rate on those loans. And especially growth stock in their beginning years, they need a lot of money. And also what we've seen and what we believe for the coming weeks, how the market will react, we believe that there's still a lot of negativity and the valuations are still high. We personally believe that the stock market will go down for a couple of weeks, especially those high growth stocks. The S&P and the Dow will remain same, or even we might see from the S&P and the Dow some even greater returns. because recovery plays at the hedge fund markets are high. Bloomberg is giving out good news for those kind of stocks, and they're actually hitting earnings. We've seen from those previous quarters that they were announcing not so good numbers, but now there's a positive outlook, and then the vaccination has arrived. So those recovery plays, especially those airline plays, are right now are being respected by the hedge fund community.
I heard that Air Canada is almost at 30 now when it was at 12 starting COVID. So yeah, I think airlines is a right play. But remember, stay in the market, and timing the market beats timing the market. So don't sell, just keep buying.
Yes, keep buying those stocks. This is very important. So what I would say is try to keep a semi decent percentage of your portfolio in cash. So when those high growth companies go even down, you'll have an even better opportunity, and even an opportunity for an even better opportunity to invest in such companies. We do not recommend selling at a loss, especially when those growth companies expect to do great numbers, great returns, but their valuation is still high. So you have to be very, very careful if you want to invest in such companies.
Thank you.
Thank you very much, the
BnB.
BnB.